If you're new to forex, you're probably wondering one thing. How do people actually make money from this? Let me explain it in the simplest way possible. In forex trading, money is made from price movement. Currencies are always changing value. Sometimes they go up, sometimes they go down. Traders try to profit from that movement. If you believe a currency will increase in value, you buy it. If you believe it will decrease, you sell it. That's the foundation of every forex trade. Imagine you buy something today for a low price. Later, the price goes higher. If you sell it at the higher price, you make a profit. Forex works the same way, except instead of products, you're trading currencies. For example, if you buy a currency when it's cheap and sell it when it becomes more valuable, the difference is your profit. Why the market moves? Prices don't move randomly. Currencies move because of supply and demand, economic news, interest rates, global events. When more people want to buy a currency, its value goes up. When more people want to sell it, its value goes down. Beginner truth. Forex traders don't need huge price movements. Even small changes in price can create profit if managed correctly. But this also means losses are possible if you don't control risk. Forex money is made from buying low and selling high, or selling high and buying back lower. No tricks, no magic. If you're a beginner and want Forex explained step by step, subscribe for simple lessons with no hype.